Himanshu Srivastava, Senior Research Analyst of Morningstar Advisors India, now joining us live here on Markets at Lunch. Good afternoon. My first question to you, how do you interpret the FII flow trend that we've seen for the month that's just ended, that's April? Any significant pattern?
Well, the month of April had a mixed pattern actually, and that was really surprising given that the kind of inflows of 4.7 billion USD that we have seen the month of March coming to month of April. Initially, in the month of April can be divided into two phases actually. From April 1 to April 9, we saw significant inflows to the tune of 770 million USD, whereas post that till the month end, there were outflows to the tune of 440 million USD. Now that is really surprising given that that was not expected. However, if we drill down a bit more, the reasons for the same are not hard to fathom. One of the reasons is definitely the geopolitical tension that we have seen brewing up between US and North Korea. Even US bombing to Syria and Afghanistan created a bit of a tension, a bit of an uncertainty over the geopolitical issues, and that would have prompted FIIs to adopt a cautious stance and hedge their risk, given emerging markets are more susceptible to this kind of risk. I think that is where we have seen some of a sellout happening. On the domestic side, I think the GST, their implementation and the rate and what will be the impact on the concerned sector is something that FIIs will be watching closely, given that there is still the rates are not out and there is a bit of an uncertainty. They are staying on the sidelines. Broadly, if you see over the quarter, the flows have been good, and this is not the pattern that we expect to continue. Fundamentals continue to stay strong, and going forward there will be a bit of outflows and inflows happening, but on a larger, broader scale for the year, we see that the inflows into the Indian market should be positive.
Okay, so you're expecting the FIIs to remain as net buyers. And what about the forex movements? Does the rupee-dollar movement have any role to play in the events that we saw unfold in April?
Yeah, that cannot be ruled out. Actually, if you see, rupee has been appreciating for quite some time now against the USD. This year so far until April, rupee has appreciated over 5%. On the other hand, even equity markets have gone up tremendously. So if year to date BSE Sensex have posted over 12% return, year to date BSE 100 index have posted somewhere around over 15% return. Now if you combine both of them, in fact FIIs are now making money not only because of the market movement but from currency conversion. So this has provided a bit of a profit booking opportunity to FIIs, which some of the FIIs might have opted for, and that would have also contributed towards the sell-off that we have seen towards the end of April.
Makes sense. Himanshu, hi afternoon. So what's been the trend with regards to India-focused offshore funds and ETFs? Does it show similar trend, or you notice anything different here right now?
Well, until March, the trends have been pretty similar for this year. Even India-focused offshore funds and ETF have been witnessing good flows from foreign investors. However, when you come down to the month of April, there is a kind of a divergent trend that we have witnessed. Unlike FIIs, where we have seen sell-off, we have not seen too much of a sell-off on the India-focused offshore fund and ETF space. In fact, the provisional figure that is available for us, we expect India-focused offshore funds and ETF to pump in somewhere around 700 million USD to 800 million USD in the month of April. These figures can change given they are provisional, but they won't change very dramatically. So this also suggests that the outflows are not really happening from the fund side, but they are happening from other sources through which FII put in money into the Indian markets, which is a positive sign actually.
Okay. You've also been tracking regionally diversified funds. Do you see any increased traction there for India?
Well, regionally diversified funds can be broadly categorized into three categories. They are global funds, emerging markets fund and Asia Pacific fund. Now, over the last one year or 2 years, there has not been much of a change in the kind of positions that they have been holding into Indian markets. They are neither reducing nor they are increasing dramatically. So they have been holding on their conviction on India. That is also to suggest that the intermittent news flows and short-term trends are not really impacting them. But when you go back, say, over a 3 or 4 year period, the exposure to Indian markets have definitely increased. So say over a 4 year period, emerging markets were holding somewhere around 7% into Indian markets. Now they are holding 10%. Similarly, Asia Pacific Fund had an exposure of 9% into Indian markets. Now they are having around 12%. So the exposures have definitely been increasing and they are not really impacted by short-term movements. Another interesting fact is that these are if you combined these three categories, and when you see the assets under management into Indian markets, they hold more assets compared to India focused offshore funds. So they have somewhere around 150 billion USD into Indian markets, whereas India focused offshore funds and ETFs have somewhere around 50 billion USD. So they are more contributor towards Indian markets, and not reducing exposure into India is a good sign. But we would like, because that is where they are comparing Indian markets with other relative markets, and we would like to see the exposure to Indian markets going up, which will be a positive trend going forward.
Himanshu, you've noticed that the FIIs turned net sellers from 10th April of this year. However, you also said that right at the top of this interview that this is perhaps an aberration, that you're expecting the FIIs to be net buyers in this year. So going forward, what do you think will be the focus areas for FIIs?
I think the rally that we have seen in the month of March, and that is something that we discussed earlier, is largely driven by the expectation that they have from the current government. So the focus area would be a broader aspect, macro level aspects, which will be economic growth, economic reforms, and the implementation of reforms, which will help obviously the economy to grow. That is on the domestic side. On the global side, I think the geopolitical tension aspect can have an adverse impact on flows coming into emerging markets, including Asia. And again, FD rates, by what extent US Fed is continuing to hike rates is something that is still a bit of an uncertainty. So there are expectations that we can see 2 more rate hikes, but the time will tell that. So these are the factors that they will be watching closely and will guide how much and what quantum of assets we will get from FIIs into Indian markets.
Okay, so those seems to be the focus areas going forward for FIIs, like Himanshu pointing out high expectations from the government on the reform momentum to stay at this pace. Thanks, Himanshu, for joining us with that analysis. We have to take a short commercial break. We're going to go into this commercial break by leaving you with what Mark Matthews of Julius Baer told us. He's very, very bullish in the markets and believes the current market scenario is going to push the Nifty further around the 10,000 level.